Before we begin, here's how to earn continuing professional education credit for attending this session. Gain valuable insights by attending the podcast, then complete the assessment test to download your certificate. To do this, follow these simple steps. Click on the link in your description to access the session. Create a free account and attend the podcast. After the podcast, take the assessment test and download your certificate. It's easy, and it's free. We highly recommend checking out our subscription. Let's get started.
But anyway, so let's talk about the tech step trap, right? Because with this AI innovation and everything, now there is, I believe, I don't really think there is any firm or any organization left out there who has not got some sort of application which is AI based or something like that. I mean, they're using it. Everybody's using it. OCR or through e-signatures, workflows. We've got client portals. The clients are also buying that, but they still feel like they are running in place. Despite this automation and all that being there, they still want to have this so many other apps to make that work. So it's they've fallen into a tech stack trap. That's how I would call it. So how do you help firms avoid falling into that trap?
Well, I think it's important to be cognizant of what your firm technology capabilities are. So we at Harness talk to firms that are an individual breaking away from a top 25 firm, creating their own practice that has nothing, no expertise, evaluating technology, et cetera, at one extreme. And then we talk to regional players or private equity backed roll-ups, et cetera. At the larger end, all the firms now have an IT team. They have a group, that is thinking about evaluating new technologies, integrating technologies. It may not end up creating perfect solutions, but they at least have the capability to say, hey, we're okay with one solution that's going to be our engagement letter thing, which is different than document management, which is different than tax tech, which is different than this. And doesn't matter if they even integrate organically, we'll find a way, to stitch this together. And again, don't always get this right, but these bigger firms always have the resources to have that flexibility. I think for
Welcome everyone to another episode of your favorite podcast we're trying to figure out. Today we're zooming into on transformation that's reshaping the accounting world, moving from compliance work to true advisory services. My guest today, David Snider, knows his shift inside and out. He's helped tax professionals move beyond just filing forms to building real relationships that deliver value year round. David, welcome to the show.
Great to be here. Thanks for having me, Saul.
Absolutely. So, all right, David. So, before I get in, I just want to let all our users know that if you're actually listening to this podcast on LinkedIn or on YouTube, please feel free to drop your comments. And yes, if you're looking for CP eligible credits for this webinar, head on to my-cp.com/podcast or download our MyCPE ONE app to listen to this podcast on the go. It's available on Android as well as iOS. All right, David. So let's get right to it. You've been saying that compliance-only models are becoming unsustainable. Can you talk about what's driving that change?
Really two factors that are coming together at once for firms. I think number one is individuals just have higher expectations of technology and service providers. When you think about the transformation that's happened in financial advisory, because of the pressure of robo-advisors and other stuff, financial advisors have been forced to go from the compliance side, if you will, of them historically in their core workflow, which was just rebalancing, picking mutual fund stocks, et cetera, to one where yes, that happened and it's part of the equation, but really they're creating value by understanding client needs, doing planning, helping align and capture, hopefully, value in ways other than just investment alpha. The same is true for tax, that I think more and more clients are expecting the advisor not just to get it done, but to be identifying things proactively to create value for them. That's, I guess, maybe the bad news in that advisors have to shift. I think the really good news is when we ran some surveys going back several years, I'm actually running one right now, I haven't gotten the results back on this. Tax tends to be one of the areas where the consumer has the highest incremental willingness to pay for
Right.
the service if the advisor creates value. And I say if, meaning that like they don't want to pay more for just getting compliance done. It's painful enough as it is to pay for someone to tell you how much to pay, the government, but they feel like there are lots of opportunities that they are not capturing. And if there's someone who's going to unlock some of those, some of the time, they are delighted, for there to be value capture for the person, who is that guide. And so when I talk to practice leaders that I think are particularly sophisticated, often actually practice leaders that have a financial advisory background as well as tax, or they're delivering both services, there's a focus on what I call sort of FCC, find, communicate, and capture, meaning you are identifying opportunities, whether for a client prospect or for an existing client that you work with. You are communicating those clearly, and then you're obviously capturing them. And to some extent, maybe there's a final C, which is communicate again, the capture that you had where they recognize how much value creation your intervention has created. So that's all sort of one piece to answer your question. The other is AI is getting better. TurboTax is getting better.
Yep.
If you are only doing pure compliance and are not perceived as a value-added advisor to your clients, they're going to look for the cheapest way to get that utility. And I think the goal for all advisors should be, how do I not be a utility service? Hard to make a lot of money just booking domestic flights for people in the era of kayak.
Yes.
But there's still lots of great travel agents because there's a multifaceted consultative discovery nature to it. I think that's the same across all advisory industries. And so for both of those factors, we're big believers in making that transition, or diversification, depending on how you think about your business today.
True that. True that. I mean, it's not just about IRS deadlines anymore, right? Client want insights. They want direction. They just don't want deliverables, right? And when we talk about, the shift from compliance to advisory, what do you think is the biggest misconceptions that firms have when they're trying to make this shift from the compliance to the advisory side?
I think a lot of firms get overwhelmed by what advisory means. It's like, oh, I'm not working with, $50 million net worth business owners. So like, advisory is what, that is, or it's people that really are providing CFO advisory services to business in place of that. And like, that is true. That is value add and a place you can generate a lot of fees, but it's helping someone, might have a couple $100,000 business. Think about, if they don't have a financial advisor doing this, what's the right self-directed retirement account to capture the tax advantage savings there? It's about, helping them to understand whether they're overdue to transition from Schedule C filing to having an entity that's separate from that stuff. It's, helping someone who's a new parent understand, 529, or, whether you, after seeing 50 Instagram videos about it, like, can you really employ, your children in that business that you have, to get income for them that, they can put away in a Roth account or something. So, don't get intimidated by what advisory is. It really is around adding value beyond the utility execution of compliance.
No, absolutely. I love the way you painted that picture. It's not just because I think you bring out a very interesting point. Because whenever anybody talks about advisory, you're right. A lot of them would be thinking, oh, this is for those people who got already a lot of money, because that's where it probably comes in. But no, I mean, there's so many various ways to which advisory can be put in. So it's always about that mindset, the mindset reset, that
Yeah.
needs to, right. So let's paint the picture. Right now, it's 2025. Advisory is not something that's been happening now. It's been something that's been happening since a long time. Just that the level at which it's happened has gone down. I mean, it has gone up, in fact, And now there are various ways through which advisory can happen, like you just pointed out with those beautiful examples. So how does a modern advisory focused tax firm actually look like in 2025?
Do you want to earn CPE credit? Take this course of MyCPE ONE to earn free credit. Click the link in the description to get started.
Well, I think, and I was just doing a program for the New York CPA community and talking about this transition. I think in order to do this, I don't meet a lot of tax practice owners that say, gosh, at least during busy seasons, I just have all this extra time in my hands. And so part of this is, how do you think about using new technology and automation to make the lower value or more utility oriented tasks that you are providing more time efficient, to be able to have the mind space or the time to do more, deliver more, communicate more often, more proactively, et cetera. And so for most practices, that means, how do I make the shift from tech 1.0, what I call sort of basic digital transformation of, I have email, I have a Dropbox or a, safe send account or whatever it may be, to how do I implement technology that has some workflow automation, that has intelligence around what I need my clients, to be doing, uploading, telling me how that data gets taken, into my underlying tax software, and how insights can be drawn from that. So I think there is a needed investment that may seem expensive, but it's going to be more expensive if you don't do anything over your long-term profitability, sustainability, to do those things. And then I think it's around setting expectations and going back to that find, communicate, capture equation. One of the things that we've heard from a few firms that has helped them unlock a lot of value is having multiple pricing tiers for their clients that helps them make this transition. So it's sort of a forcing mechanism of, if you've always told your clients, hey, it's $1,000, a return or whatever else, you've been in this murky gray area of like, well, they call for help on this thing. They're kind of pissed if you charge them incrementally for half an hour. But like, if it's an hour or two, like, where's that line come in? And I think defining, there is the most basic package, I'm going to like take care of stuff and get that done, and that's the price you already paid. Or, for 25% more, like, we meet before and after, and we go through it and do XYZ, or there's this like third premium thing that adds incrementally, to that, et cetera. That forces you to make sure what advisory add-on value add things you might be doing. It forces the client to make a proactive decision of aligning expectations. And in most instances, it will end up driving massively more profitability, because it allows you to step change pricing in ways you couldn't probably feel comfortable facing a client and saying, hey, Saul, I've been charging you X, but now it's 30% more, this year versus last year. Not a lot of advisors want to do that. Not a lot of clients want to hear that.
Well, but I love the way you said, you talked about automation. I definitely want to talk to you on that, but probably not for this podcast. There's probably an episode for something else. But I love the way you're picturing this out. Like, you're building actually a firm that feels more like a strategic partner. It's not just like a seasonal vendor. But there's one thing that I always hear, which is actually very funny. When I heard it for the first time, I was like, he's got a point. It's like, how do I sell advisory when there is no product? Like, a tax return is a product, bookkeeping is a product, but tax advice, there's no tangible like a product per se.
Mhm.
So how do I sell it? How do you talk about value when you're not handing over anything physical, like a physical deliverable?
Yeah. Well, I think sometimes the answer is advisors can actually create a deliverable. Like, one of the things that we pioneered Harness, because we were finding some people that had equity compensation driven tax complexity, it didn't work well for anyone to have them talking to our Harness advisors, looking for insight, but where the advisor really want to talk to them if they're converting now. And so we're like, great, there's a missing solution in the market of having a, paid 1 hour consulting session. Now, there's not intuitively necessarily like a thing that you'd be getting, but we created, a more packaged deliverable around, some scenario planning, something that was easy for the advisor to do with our technology, but it made the client feel like, oh, I got something out of this, there's some insight beyond just the hour spent. So I know advisors who, create Loom videos that go alongside the 1040s or other stuff. Like I think you can, going back to that model of like find, communicate, capture, meaning, capture the economic value yourself. That can be applied in a lot of areas. And, the more that you invest in your client experience, both upfront and in the deliverables, the easier it is to capture, because you've done a better job communicating both verbally, and with something in writing to create that value.
And I love the find, communicate, capture point. I think it directly resonates to exactly what advisory is all about. I think you summarize it really well. But pricing is a sticking point. It's such an interesting sticking point when it comes to advisory, and a lot of people have that fear that will the client pay for something that they don't fully understand. Because that can happen. Like you're trying to say this, but the client is probably not able to understand it. So how how do you do this? Do you like create a client education program, or do you set expectations when you're selling the strategy? How do you do this, or how do you ensure that the client understands what you're trying to sell them?
Yeah, well, I think people understand two things: either a problem, like I've gotten this IRS letter, or I have a business partner trying to leave and there's some implications for like, ownership transfer, et cetera. And you can say, hey, to solve that, we need to look at 3 possibilities, understand all the facts, and this is what it costs to do that. Or it's around, hey, I've observed among other clients or in general, like an opportunity. It makes me think of going back when I first started working actually with my financial advisor, was right around when the TCJA, was going into effect for the first time. And, he highlighted the opportunity, at least in New York State, that you could make charitable donations that were seen as both a, state tax contribution, and had deductibility beyond the SALT cap for at least, that first year period of it. And so that was really additive because it was like I could quantify the savings from that. And that wasn't really an example of planning that was priced separately, but it's an example of like, hey, a very concrete value add where I've just been saved X amount of thousands of dollars. And so if that's part of an overall package where I'm getting compliance and planning, like, yeah, that made sense. Like I was told something I wouldn't otherwise have done, and it resulted in this benefit to my bottom line. So I think either of those scenarios can work.
Yeah, absolutely. And for our listeners who are probably nodding along, but they feel they're still stuck in compliance, if I were to ask you, what's the first step they should take to shift from where they are today?
It's either the find or communicate. I mean, there's some advisors that are not looking to find. I think there are not many of those because I think everyone that I meet in this space like cares about delivering value to their clients one way or the other. It really starts with communication, in finding a way outside of, the actual filing or extension filing date to have a conversation and hopefully communicate something that the client feels is additive, or at least that they're being heard, and therefore you're taking that feedback and approaching what you're trying to do for them. So I think communicate, I would probably say, is like the step that some people are missing. And you can do both the communicate and capture, meaning raising prices, charging incrementally with that. Or if you're really hesitant, do the communication, feel like you've really checked the box for a subset or all the clients, and then focus on the capture subsequently.
Well, that's interesting. And there's this question that I always love asking. I ask it to everybody. So, a question for you: what's one thing you want to unlearn in your early advisory journey? Take your time.
Well, I think, listen, we were new to the tax space to some degree, 6 years ago when we started building. I think there's a tendency, and I think for a lot of people that are new to a space, to be like, hey, we think the consumer experience process in tax should look exactly like this. And if it looks like this, we can automate more and add all this value. And I think you learn quickly over time. There's so much nuance, whether justified or just a function of how advisors that have done things, that it's important to get that balance right of enough flexibility for clients to behave how they want, but within the constraint overall of sort of how you want to build for advisors. So I think for traditional advisors, you just have to worry about how much of what you're doing aligns with or diverges from what your clients expect. I think for a company like ours, where we do feel like we're serving the end consumer client, but it's really through the tax advisors that are on our platform using our technology that we will introduce harness generated clients, to them around, that you've got to be adaptable and understand workflows with a lot of nuance to create something that the user feels like, is receptive to what they need and adds value.
And this is a bit of a out of a tangent question, but a lot of tax advisors use your product harness, wealth, the product that you got out there. So do you have like an education program through which tax advisors are looking to see the value proposition? Do you have an education program in place so they're able to see the potential of the product?
Yeah, I mean, it's an area that we've invested in a lot recently. So like on the harness.co website, if you click for advice, it sort of walks through the value prop of all those things. I think one thing that I've learned from now having spent a dozen years in the tech-enabled service superpowering advisor thematic space is you've got to create something of value, but then you really can't underestimate how much time you have to or should invest in helping clients or prospective clients understand and implement. Advisors that we want to work with have all been successful independently. They'll be successful without us. We obviously believe that we make them a lot more successful, but you've got to, be able to articulate what about a change is going to be valuable enough for them and for their clients to get them to make that leap. And then how do you handhold people along that journey? And I think I have generally felt that, having a more white glove experience that help advisors onboard faster, implement, more quickly, be able to answer their questions, their team's questions, client questions is more valuable. I mean, that's the approach that we've taken at harness.co, versus one where it's like, hey, we are 100% a software company, try this tool, go spend time in a forum chat if it doesn't work for you to learn from what others have done, et cetera, versus a more bespoke solution.
Yeah. I mean, we've all been there. Wherein we've seen a software, we go through it, and then we are trying to just figure out our way around it, and we're probably looking for solutions. Today, search engines are optimized to that point that you ask them a question, they're actually able to find a lot of solutions, but probably 10 years back, that would not have been the case.
Yeah.
And we would still be just stuck with a tech stack. But glad to know you are hand in hand with all of them.
Access latest and trending CPE courses with my CPE One Unlimited Access subscription. Subscribe now.
Today we're diving into something that's got everyone in the accounting talking. AI, automation, and what the heck we are all supposed to do with it. Now, David, let's just start with the elephant in the room. Everywhere you look, Twitter, LinkedIn, news, everywhere where you look, the news is AI is going to take your job. and when people say AI will replace tax professionals, what do you think they are missing?
So I think, the viewpoint that I bring to this is I've spent half a decade wearing an investor hat, most of that time at Bain, and then a dozen years building technology to help advisors. And prior to building Harness, which is focused on modernizing the tax industry, was helping to build Compass in the real estate space. And I think there we constantly heard sort of the role of the real estate agents going away. You've got multiple listing services. It's all straightforward. And there's been, very strong persistence of the percent of transactions in the US in residential that have stayed human brokered, let's say.
Yeah.
I think the closer analog to what AI is to tax is what robo advice or automated investment management was to financial advisory. In that, if you sort of rewind the clock back to 2010, 2015, with the early Betterments and some of the others kind of in that space, there is a broad-based view that financial advisory was going to get decimated. Either the fees were going to get clobbered by 80%, or half the clients would disappear. And that really hasn't happened. And it hasn't happened, I think, largely for two reasons. One, psychologically, in areas that people don't totally understand. They want the comfort of working with an individual, even if the outcome or what they do isn't different than kind of what software might tell them. But the second is that the advisors shifted from being largely focused on investment management advisors to holistic financial advisors that really emphasized planning as much as the execution of the investment management side. And so I think when it comes to tax, if all you're doing is emailing clients once a year, telling them to send docs, processing, 1040 returns and charging $500 for it, TurboTax is getting better. TurboTax Live is more interesting. New solutions, I think, are coming up that are AI native or close to it that challenge that as a value proposition. But I think for the firms that look at this and say, okay, great, there's an opportunity to have dramatically less tax associate labor or offshore labor doing the manual entry of forms, from client provided into tax software or of some sort of basic transformation. I can either, use that to have just higher margins, but things are competitive, so that's probably not sustainable forever. I can use that to spend more time and energy in creating valuable relationships and being more collaborative with other advisors that work with my client. Then yeah, you're going to be, equally valuable, in many cases, able to charge more, serve fewer clients, and have a more profitable, more attractive practice than you would have in the pre-AI world.
Yeah, I mean, it's like, there's a fear that tools will do the thinking. It's not just the typing, but in reality, the advisory layer, which is what a lot of tax professionals are moving towards, which it's got context, judgment, there's nuance to it. That's still very human, right?
Totally. Yeah. And again, I think on the other side of the spectrum, like there's a firm that we work with that was testing out one of the newest, it just raised a big round of venture capital that sort of held itself out as like, upload the docs and we'll deliver, completed returns, et cetera. And they felt like, for the simplest of returns, it was 80% right. And for the medium or medium to high complexity, wasn't even worth trying because it couldn't, totally nail the really simple stuff. And so it will get better unequivocally, but I think a view that it's all the way there, I can go have a relaxing time watching the Masters in early April and not have to, crank away, et cetera, I think is also wishful thinking, at least as AI stands in tax, as of 2025.
So, like in your view, what types of tax or advisory work are least likely to be disrupted by AI anytime soon?
Yeah. Well, again, I think it's a lot of it is the opportunity to disrupt workflow. And if you're not at a firm that's thinking about what that looks like, not tomorrow, not next year, but over time, I think clients will either feel like, hey, I'm paying a lot because that's what it takes to have a very people-heavy service model to get this stuff done without it.
Right.
Or, I'm being offered to pay the same, but with way more bells and whistles, support, more delightful interface, et cetera, by, someone else that's out there. Or, a friend of mine works with a firm that he's raving about or she's raving about that feels like they're getting a lot more for the same situation. So what does that mean? I think for the client experience, you want one that creates transparency where the client feels like, hey, I'm not being asked for stuff twice. You know what I should be providing you. You know if I did provide it or not. You're able to, again, only ask the questions that are going to unlock new insights or things I may not have thought to tell you that are going to result in tax savings or tax strategic opportunities to discuss. And then once you have that data, like how do you get it as efficiently as possible into the technology used to create underlying tax forms? Again, for the tax side of things, there's a different set of stuff on audit, that can also be utilized. It again is not totally replacing the role of humans, but it's certainly supporting anomaly detection, data collection, et cetera, to make that faster, easier, et cetera, for the client who gets more visibility on what's going on, but also for you as a practice leader.
Absolutely, absolutely. Now let's shift the gears from theory to the real world.
Mhm.
You've worked with so many people. So what are some practical ways that you've seen these firms actually use AI or automation to make their lives easier, and not without overwhelming the team, of course?
Yeah. Well, I think one of the things that's important is, in our view, there's sort of three phases of tax firm technology. The first is that basic digital transformation, which is adopting email, e-signature, a place for your clients to securely transfer documents, a technology to digitally populate your 1040, 1065s, and to be able to, get your EFIN number and transfer it to the IRS. I would hope, that everyone listening is sort of like check the box on that phase one of basic digital transformation, which largely occurred between 2000 and 2020. I think the real laggards had to drag themselves over the fence, at the beginning of COVID. And maybe the earliest firms were starting to incorporate this in the mid 1990s, but most were doing it 2000 to 2020. I think in the last 5 years, forward-looking practices, and now I'd say the majority of practices have really thought about where are there automatable processes that I can use to create efficiency for my internal team, my clients, et cetera. Engagement letter automation, doc collection, a whole bunch of different pieces in that core workflow. And then only once you've identified what are the things that you're spending a lot of time doing manually, many of which, perhaps there's some digital automation process in place. It's like, okay, how do I turbocharge this? So yes, there is a secure place that clients can upload a, IRS notice. Is there a way that I can use AI to generate a faster response letter, for them? Great that clients had a place to upload documents, but how do I, in real time, again, compare what they've provided to what they provided last year? How do I help, rename documents so it's easier for me to understand? And for them, how do I, auto sort stuff so work paper creation is easier? How do I get more of that data into the underlying tax engine, that I need to support stuff? And so those are the things that are really valuable. And then I think if all those foundations are there, then you can start thinking about, investments in some of the AI presentation tools of, okay, this tax return got done. What is there to, surface for the client around that in a more digestible way than the traditional, 2-year worksheet and completed whatever 1040, 1065, et cetera.
Well, there you have it. I mean, like, though you said a lot of things, but I do think that, whatever you said, I think it's the simplest of things. I like simple wins the matter. It doesn't matter. It doesn't mean, it doesn't mean that you have to have chat GPT in like everything that you do, but to start with something simple, which is more manual intensive, and to just start from there and then grow from there. So I like that. And then when you talk about tech stack, you talked about, how people can upload, and then through some way AI can capture it, understand the notice, and do that. And that brings me to a very interesting point, because all this automation and AI, there is a term that has been doing rounds. It's called OCR, right? Now they're saying that, these technologies, they say that, due to OCR, you'll be able to automate the data entry forever. And I see people still complaining that, okay, even though it says that, the OCR will get all the data entry done, they're still complaining that it just doesn't work. I mean, so what are some big limitations you're seeing there?
Yeah, I mean, it's definitely getting better. So again, just for context of listeners, OCR is around the optical recognition of characters, which is a technology that existed before AI, which is a higher order of reasoning based on a set of parameters to draw from a data set around. I think um, OCR has gotten better. I think some of the clarity and standardization of underlying tax forms that the OCR would have to read, have gotten better. But really the big unlock is in when you can combine multiple technologies and have some layer of human involvement as well. And so I think like with harness technology, we have a combination for that data extraction of OCR, AI, and a human verification layer, because we're still not in a place where it's accurate 100% of the time. We want our advisors to do their own check and sense check things, et cetera, but we don't want them to be the last line of human defense against the process. So I think what's great is there are companies purely focused on getting better and better at OCR. There are businesses purely focused on advancing the underlying, core AI models. There are firms focused on the data sets specific to individual industries. Our approach at Harness is really being able to build stuff on a proprietary basis, but incorporate multiple best of breed underlying technologies to the benefit of the advisors that we work with. And so I think that's the most valuable approach over time. I mean, I think as you were describing, I was like, and I'm sure, your listeners wouldn't do this, but, there are lots of people that will punch in sensitive information of their own or their clients into publicly available models like a chat GPT, et cetera. And like, that's a bad idea. And so I think understanding the delineation of what are things that are AI driven that you're only interfacing with the public data, but you both should be cognizant of like what you're putting in and what it can draw from to give you the output out.
Yes.
And the more open-ended, the more free, the more non-industry specific, the more likelihood for, problematic issues on either end of that equation. Where I think the firms that are thoughtful in their application are using underlying models, but with rig fence data. So they're only learning from stuff they feel like is good enough to be learning from. And they're
Yes.
only, having information go in, but not go back out to
Yes.
third parties or anything else that could be problematic.
Yeah, absolutely. I mean, you bring out a very interesting point. I mean, there's other school of thought. There's somebody whom I'm speaking to who is talking about the ethics of AI, because all this information that AI is, because AI is like, you tell it what to do and it will do. You teach it what you want it to do, and that's how it will behave. And then there is an ethical side of it. Like, where does the AI draw the line that what this person is asking me to do is is not ethical,
Mhm.
is not correct? I mean, there's not really any clear set of rules or any charter in place, but eventually, everybody's trying to build their applications in a way that it leads to that point that AI is cognizant enough to say no to certain things because that's just not right.
Mhm.
Are we there yet? I'm not quite sure. I mean, I am hearing stories even for OCR. I mean, as simple as OCR, it says that, okay, it's reading 80% correctly, but then the end result that you get, you end up fixing almost
Yep.
100% of the output.
Yep.
So it's crazy. But anyway, so let's talk about the tech step trap, right? Because with this AI innovation and everything, now there is, I believe, I don't really think there is any firm or any organization left out there who has not got some sort of application which is AI based or something like that. I mean, they're using it, everybody's using it, OCR or through e-signatures, workflows. We've got client portals, the clients are also buying that,
Mhm.
but they still feel like they're running in place, despite this automation and all that being there. They still want to have this so many other apps to make that work. So they've fallen into a tech stack trap. That's how I would call it. So how do you help firms avoid falling into that trap?
Well, I think it's important to be cognizant of what your firm technology capabilities are. So we at Harness talk to firms that are an individual breaking away from a top 25 firm, creating their own practice that has nothing, no expertise, evaluating technology, et cetera, at one extreme. And then we talk to regional players or private equity backed roll-ups, et cetera. At the larger end, all the firms now have an IT team. They have a group, that is thinking about evaluating new technologies, integrating technologies. It may not end up creating perfect solutions, but they at least have the capability to say, hey, we're okay with one solution that's going to be our whatever engagement letter thing, which is different than document management, which is different than tax tech, which is different than this. And like, doesn't matter if they even integrate organically, like we'll find a way, to stitch this together. And again, don't always get this right, but these bigger firms always have the resources to have that flexibility. I think for certainly the new firms, but that runs all the way up to firms that are often at the lower end of the regional firm scale. You want to pick solutions that are evolving constantly in value added ways, that are building APIs and connectivity to other applications that are not trying to be totally closed off, et cetera, because it's going to lead to so much more ease and so much more dexterity as tech evolves to do that. And so, we've taken a much more connected, open architecture, best of breed approach. Certain others have a different approach, and they may argue that that's better, but I do think that important as a firm to sort of be aware of what are the resources we have to do this stuff. Do we want to be doing any of it in terms of evaluating, selecting, integrating, or do we want partners that can really take care of it and provide a more turnkey solution? And that impacts, I think, how wide the trap is that you're talking about.
Yeah.
It varies based on what a firm's internal staffing has the experience and capability to do.
Yep. Like every tool will promise that, there's a single source of truth, but it will end up becoming just another inbox, So, and then we got the tech stack. And after you figured it out, there's also the implementation fatigue, right? So, what's your advice for firm owners who are like overwhelmed and they're not sure if they're like ahead or behind anymore?
Yeah. Well, I think you mentioned implementation. One of the things that I hear all the time is a firm that says, gosh, this looked like a great technology in the demo. I think it might be, but no one explained to me it would take 2 seasons for my staff to understand how to actually use it and for it to add a modicum of value. So really important for listeners who are thinking about new technology, et cetera, to understand, are there costs to onboard or implement? So like a lot of the biggest tax technology companies have wonderful high margin sub businesses in professional services, in onboarding fees for kind of prepackaged onboarding of basic products, et cetera. And, that's okay as long as you go in eyes wide open of what that looks like, how much time you're going to spend, how many dollars to get that done, et cetera. But also understanding like what is the level of support, how much support's included, how much support's incremental in that implementation process, because there's a big difference of a solution that you're buying where there's someone dedicated and responsive to getting you using it, and ones where you buy it and they encourage you to go spend a bunch of time in their online forum talking to people who use it and like it for them to solve your issues for them rather than having a big, white glove concierge implementation team. So ask the questions, know what you're getting, both in the functionality and what that unlocks, but in the implementation, training, onboarding, data onboarding, et cetera, for it to be successful.
Yep, absolutely. That's a great mindset reset. Sometimes progress isn't just flashy, it's just cleaner data, easier to implement, getting things done, fewer clicks, you know, be able to get it done. That's great. Now, before we wrap up, let's just future cast for a minute. What's one area in tax advisory where you think AI will make a huge difference in the next few years?
Well, what I'd been really optimistic about, I'm a little bit more skeptical of now because of federal government funding. But to me, I think there was a real interest from the IRS, at least in the prior few years, of surfacing more data in real time to the
Right.
individual, to the tax advisor. Like, you now can actually go through a KYC process and, get a pretty interesting, detailed sort of general ledger. You can see the IRS's version of the internal 1040 that, in my view, is far more readable for an individual layperson than it is, the core 1040 tax document you submit. But I think in the current funding environment, the self-filing progress, I think, has been halted. I think some of these other technologies that really make it easier and more transparent are probably going to progress at a much slower pace. And so that had been the hope of, like, how to get the US closer to other countries where there's far more visibility in what the data, communications, et cetera, the IRS has about you. I mean, we have the former IRS Commissioner John Koskinen as an advisor to our business. And, you know,
Nice.
I've had him in a bunch of events, explain the complexity of the different legacy tax systems and, cobalt languages and all this stuff. And it's a big challenge, but I think there was a real intent to make that easier, more transparent. And we may
True.
take longer to get to that place where advisors and individuals are supplementing, not providing de novo every piece of information as if, the IRS didn't already have most of it in the forms being submitted to them.
Now I agree to you. In fact, there was this other lady that I spoke to who has been at the other side of it, about the IRS systems that you're talking about. She did say that, there is that transformation that's happening wherein we're able to get now more real-time data as it happens. But at the IRS end, there's a digital transformation happening, but when that will continue be and come at par with what is happening everywhere else, is still to see. But AI could be the answer to it. AI and automation could probably help us get there quicker. So yeah, I completely agree to you on that. Now, with that, before I let you go, David, if there's anyone listening, what's the first step that they can take this week to better align their firm with the future?
Well, I think, we did a prior session around how to help transform your practice from compliance to advisory. I think this session's all around how do you do the digital transformation. I think the most important first step is, what do you want your business to look like? Meaning, where do you spend time and enjoy it? Where do you spend time and hate it? Who are the clients that you say, A, they're enjoyable because I'm working on the problems I like, but B, I feel like I'm creating value for them and capturing value that's like a positive margin client, et cetera. And from there, kind of work backwards, which is, what do I want my business to be in 5 years? What are technologies that I can utilize to help mitigate the costs and mental pain of me or my staff doing stuff that are required but may not be where we want to spend time, in order to get to a place that feels like the advisory practice I'm excited to have. And so I think there's got to be alignment of end goal, services offered, and technology to make that stuff possible.
Well, David, I don't know what to say, but you probably have your wisdom has probably cracked the code for a lot of firms as they're listening into this. So thank you so much, David. I think this has been very insightful, and it's always pleasure to have you. You somehow through this podcast, at least you have at least made it that you have at least made the technology feel more human, not less. So thank you for explaining that to us. We've covered tech, workflows, and advisory. And today, we are going deeper into scale, what it means, how to do it without breaking everything, and how to transition from founder driven hustle to team powered execution. So, David, let's rewind a bit for anyone who is just joining the series, right? What sparked the idea behind your company? What gap did you see in the tax space that no one else seemed to be addressing?
Thank you. Well, that story starts even before we land on the tax space, which is that I was fortunate back in late 2012, early 2013 to get asked by a friend to join the team he was putting together to build Compass. Initially, that business was focused on how do we eliminate, the traditional real estate agent and make the residential search process dramatically, more efficient, more consumer friendly. We pivoted reasonably considerably, within the first few months to actually recognize that it wasn't the agent that wasn't working hard for their commission. It was actually the brokerage platform that was not adding a lot in the equation and creating value. And so ended up spending half a decade at Compass helping to build that technology enabled platform for advisors. And when I had the opportunity to go back to Bain Capital, where I'd been on the private equity side, this time as an exec in residence with their ventures team, I was really interested in this theme of where technology could create value collaboratively with top quartile, quote unquote, traditional advisors with great expertise, but where often their digital experience, either for themselves and their teams, and certainly for their clients, didn't feel as contemporary, and that was not generally a leg of the value prop stool for those that they served. And so Harness started as a service discovery advisor pairing marketplace. That the challenge I saw was actually more for the next generation successful professional wealth creator, that it still is, complicated to navigate financial planning, holistic wealth management, business tax, personal tax, trust and estate, to get those things to work well together, to know what you should be doing, how those multiple advisors in most cases could collaborate more effectively. And so we started initially solving a emerging demographic and wealth creation driven pain point. What we found pretty early on in that journey was that tax tended to be the most demanded service of those that we offered, but also the one where the supply was the shallowest. And when we talked to the advisors that we thought could be the right solution because they had good expertise and capacity and a price point that made sense, et cetera, there were all these structural reasons why they couldn't, take on more clients, or they weren't as adaptive, or old firms didn't want to, do things differently. And so we saw an opportunity to be able to create a business that could power the most entrepreneurial and client service oriented professionals across their practice area. And so that really has led to the harness that we've focused on chatting about for the past couple sessions.
Wow, wow. I mean, it's always interesting how, the best ideas don't usually come from trying to be clever, right? But it just comes from trying to fix that something broken. And now, like we have one of the biggest pain points that we hear from firm owners, and it's that dreaded plateau that they hit a ceiling at around 1 to 3 million in revenue. And so why does that happen so often in your view?
Well, I think in two reasons. I would say number one, tax is harder than most professional advisory businesses. Like if you're an insurance broker or you're a financial advisor, you get more operating leverage in that once you've worked with clients for a while, there's sort of these like semi-consistent annuity-like streams of revenue. And so it allows over time for you to grow without having to scale and build a much bigger business, at least not as dramatically. Being a tax advisor CPA is, I think, just more challenging in that, you're getting paid for the work that you are doing. It's very active in the vast majority of cases. And so it's tricky to get that balance right where, from zero to a few 100,000, you can do it just yourself, or yourself with, a little bit of fractional help here or there. A lot of firms kind of put in place the admin, a preparer, to maybe they have, more manager level person that I think can enable that effective scaling to, 500K to a couple million. but it's challenging, and it requires, I think, a combination of process building and process improvement thinking, of investment in technology, of investment in recruiting, training, retaining people. And that's really hard to do in a business that is as seasonal as tax and accounting tends to be, and is hard to operate from, I think, over time.
Yeah, yep. I mean, that's a very good point, because over time, when you're doing it, it does to take too much of your time in just getting it going, and then you're just limited on the number of hours that you can put into the business, and you kind of reach that plateau wherein there's just so much that you can do with how everything works. You and you're not able to break that. It's not just about, because when you want to scale, it's not just about doing something more, but it's also about finding ways to do it differently.
Mhm.
Like, that's the essence here.
Yep.
So, and so let's get a little bit into the messy stuff, because you have had that exposure of also being with Bain. The messy stuff is, whenever you want to grow, everybody's in need of money, because that's, I think, one of the important criterias when anybody's thinking about growing, scaling. They need to look for funds, either bootstrap, they have enough, or they could be thinking about raising capital, which is what a lot of people are looking into, especially with the wave of private equity and all that coming into these firms. Now, you brought in outside investment, which is still a rarity in the space. But what's changed after that moment, both the good and the bad, if you could?
Yeah, I mean, I think the advantage of venture capital is that it's the most flexible form of equity. In the vast majority of cases, sort of it gets wired to you, and there's a lot of autonomy in how that capital gets invested, but the expectations are high in terms of the growth and return on that investment. And so, you don't take it if you think you're going to just hire someone, add a couple more clients. It typically is coming from a belief in, we have a system, a process, et cetera. Generally, they're not unequivocally kind of in part driven by technology and leverage to generate fast growth, higher margin growth, et cetera. But I think what's nice is, at the moment, tax and accounting is really having the spotlight shown on it. And so there is capital of lots of different forms with different expectations, that is available. Obviously, the most extreme being selling completely. There are a lot of private equity backed, and in some cases venture backed strategies that are, selling parts of a business but maintaining autonomy. And then I think there are more and more vendors that you can actually get different flavors of lending from, if it's really, you need resources to pay people during the season, but then you're going to get all this cash coming in later, as well as some tools that are trying to shift the working capital dynamics and actually making it easier. And whether you're using, some of the tools like Harness has, or, Ignition, or others in the market, there are ways that you can think strategically, as many a person listening probably does for their own clients, of ways that you can change the cash flow dynamics of your business to be able to fund growth, in addition to, I think, more levers that you can pull to get access to capital if you want to make bigger investments in growing a practice.
But I mean, I always say this, I mean, like, I'm a big fan of funding, because for me, funding is like nitro fuel. It gets you there faster, but it does expose, like nitro fuel does to every engine of the car. It gets you there faster, but it exposes every crack in the engine. So, for you who has been there, what's one workflow mistake you made early on that you look back now, you'd warn every founder about who is looking to raise capital?
When you say workflow in terms of how we've run the business, or the workflow around
Yeah.
capital raising?
No, how we run the business. Yes.
Yeah. It's really tricky to get the balance right when you're not ultra capital constrained on hiring ahead for growth, but not having resources that are not critical to enable you to get to that next step of the business. I think for companies that are already in motion at a really fast compounding rate, you kind of get away with mediocrity at this prediction because you're going to need so many people over time that is diminished. I think there have also been points in the venture funding cycle where investors as much as operators were encouraged, like hire faster. The bodies and the hiring is really what's constraining your ability to take share, grow revenue, and establish yourself as a leader in a space. I think the moment we find ourselves in generally is one that does not have that approach, and where I think the increasing capabilities of automation, AI, also just cause people to say, well, have you thought about, an agentic thing there or something else? And so I think that the hardest part is if you have the capital of being no less disciplined around whether you need a person, because very rarely do you have someone who's not filling their time. It's like, hey, is without that person, or if we don't add this new person, what are the consequences, for the business? And that's something that I've definitely not gotten right across the last 12 years because it's a constantly moving target.
Well, I mean, like, that's kind of relatable because, when everyone is thinking about scaling, you're always talking about adding new hires, new clients, new tools. But I guess sometimes one of the smartest moves is actually to think about subtracting the friction that comes with everything. That, I guess, that's the essence of it.
Yeah.
And
I
then,
mean, there's certainly just to add on to that last, I think there's some venture companies that counterintuitively actually use capital raises or announcement of capital raises tied to, meaningful layoffs or sort of performance driven transitions. I think in a business that is reliant on external capital, there's always concerns like, oh, if, we're dropping people, is the company, really in trouble? And I think sometimes it's nice to say, no, we've got lots of new capital, but we're going to be incrementally more thoughtful and disciplined on who we need here to drive the best possible return from that capital.
yeah, no, I agree to you on that, and that's a very unique point of view that you bring forward. Something that everybody knows about, but nobody wants to talk about it. So I'm glad you put it out. And, when we're talking about scaling, there's also, when everybody starts a business, nobody start there are different types of people who start a business. One is somebody who has been working, who has studied in one of the best B schools, and now they're like, I'm going to be an entrepreneur and start my own business. That's one way. And then we have a lot of a lot of people who are starting businesses because they were employees first, they work somewhere, and now they're starting their business. And whenever you start a business, one of the things always at the back of the mind is, I'm going to have this kind of a culture in my business. This is how I'm going to run my business. This is the kind of culture that I'm going to be having. But when firms are going faster, culture either gets stronger or it breaks, right?
Mhm.
But for you, how do you maintain a people first culture in this high growth tech enabled firm of yours?
So I think there's some people that have always felt like, hey, they're a natural leader, they ought to be leading, et cetera. Like, going back to the earlier days of my career, I was very happy, in management consulting and then in private equity investing because it felt like, hey, I can call upon resources, but really, drive value more independently. And initially when I joined Compass, then Urban Compass, I was sort of a one-man band. I mean, I had the title head of finance and operations, but it was just me. And very quickly I started getting asked to, or raise my hand with a need for creating new divisions, hiring, and turned out I was pretty effective at managing people. I think a lot of that came from being calm, being fairly predictable and outlining what we're trying to achieve, the way that I thought about, investments and uses of capital and objectives of the company, et cetera, and giving team members as much visibility as possible into what we're doing, the constraints, that we may have, and hopefully creating an environment where people could do their best work. And so I think the 80-20 of culture is who the people are, who the managers are, and whether people feel like they can get work done that matters to the organization and kind of control what they're doing. And then you layer on top of it, the hygiene of the culture. Is there clarity of business values and values that hopefully help people make better decisions? Are there processes for hiring, for performance reviews, for promotions, et cetera, that people feel are clear, fair, transparent, et cetera, that I think positively reinforces those things.
Absolutely. And I guess to back it all off, I guess the tech that allows you to enable that team, not rather than dehumanizing a firm, the technology that allows you to continue to maintain that, right? So, but I like your take on it. I'm glad that you brought that out. Now, you have spoken in the past about scaling with intention. That's a phrase that a lot of leaders use. But what does it actually look like in your day to day now?
Well, I think some of the intention, as I alluded to more and more than it I think used to be the case, is not scaling the team. It's figuring out, how do you serve more clients? How do you create positive growth? And then what are the most efficient ways to resource getting there? So I think scaling is really around like, how do you add people you serve, capabilities to offer them? I mean, I think going back to your comment around tax firms getting stuck in that $1 to $3 million type of zone, that is in part happening because of staffing. It's in part happening because of, maybe a slower period to getting to new services or reinvention or new services and doing things in new ways that allow you to raise pricing, et cetera. So there's definitely a need for figuring out what's the outcome you're shooting for, whether it's about more revenue, more profitability, hopefully around maintaining or increasing the satisfaction of clients, because through maybe more scale, you can actually deliver stuff a bit more consistently rather than just being spread, more thinly to get to the same outcomes that, hopefully drive stuff. And it's the resourcing question that follows rather than scaling being about resources. How much have you raised? How many people have you hired, et cetera, that those are enablers to the goal setting, not the other way around.
Yeah, no, I get to, I love what you're saying, because you're not just building it for the head count, right? I mean, that's not the only way to scale, right? You got to build it with clarity, with efficiency, with sustainability. Those are the things that you got to take into consideration when you're thinking about growing with scaling. Well, David, I always love the conversations that we have, and there's so much that you can bring in. But I know that there's a theme that we follow, and I'm thankful that you shared this masterclass on scale. Now, before I let you go, do you have any final comments for our viewers who are looking to scale in the next 5 years with the advent of AI and automation and everything happening?
Yeah, I mean, I think it is consistent with what has been the case for a while, but on steroids in terms of, you sort of alluded to it in your answer. It's like you can and should be getting tremendous value with new technologies and not being adverse to their like headline costs, but really understanding what they can unlock for you spending time either doing the things that you want to or where you can create more value. No technology is going to replace, people applied in areas that they have true expertise in building relationships, creating value to clients, but figuring out and making sure that your human capital is redirected in places that are uniquely able to unlock value, and really understanding, which is the most timeless piece of this, what creates value for your clients and how can you be aligned in doing that. And I think, going back to one of the themes from a prior discussion that we had, the faster that you can shift from a compliance oriented, which is really more of a utility service, to that as a thing you do as part of a foundation of identifying opportunities, building trust, and helping to advise clients, the more value you're going to be able to both demonstrate and capture in the business that you run.
Well, this was fantastic, David. Thank you so much for this once again. And for our listeners, if you're trying to grow your firm without growing your chaos, replay this episode. And don't forget, David info is in the show notes. So connect if you want to learn more. And with that, David, we come towards the end of another exciting episode of We're Trying to Figure Out. Thank you so much for your time. And I look forward to seeing you more on more episodes that We're Trying to Figure Out.
I look forward to it. Thanks, Saul.
Thank you. And thank you to all our viewers. As always, see you again. And as I said every time, until I see you next time, keep innovating in everything that you do. Cheers.
Access latest and trending CPE courses with my CPE One Unlimited Access subscription. Subscribe now